This is the Friday, May 2020 version of the Market Plus segment. Joining us now via the power of technology, it's Elaine Cubb. Hello, Elaine.
Hello, Paul.
Good to see you and chat with you. As I mentioned during the broadcast, you were here in early March, and you've been here before over the years. And there was a time where we pulled you and the great Walt Hackney into a room, and we started asking questions. You were asking questions of him. I know I would want to be asking questions to him. You emailed me late last night, early this morning, with a history lesson about something that happened in your neck of the woods that this would be the time I would ask Walt for what the impact was. Why don't you tell me what that story was?
Well, and actually, I remember asking Walt about it specifically because it was in the 30s. Apparently, there was a severe enough drought that the government somehow consigned cattle, just bought them, but then bought them for the purposes specifically of killing them in a trench and burying them, which has some parallels to today. And Walt was always such a producer-focused analyst, and I'm sure his analysis of this scenario in the hog market right now would be focused on the effects and the feeling of what it would be like to lose the animals that you worked so hard at producing and keeping healthy and happy. So I would be very interested to know what Walt's perspective on this would be, but I know it would be producer focused, and he was a great one for history and to see, all the things that have happened in this industry over time.
And he would say, we've got a wall of flesh, but this is more than that. This is a glut of things. The Smithfield plant I saw today report that that's going to reopen on Monday in Sioux Falls. These plants can't be full operation. So if they are just partial, I think you talked about, we already saw chain speeds were going to slow. We're going to spread people out a little bit more. We've got to find more workers that are willing to work and hope that they're protected. At least they're hoping, that's what their union is hoping. Long term, how long does this last where we're in gear, we're slower speeds, and we've got to hold the product on the farm as long as we can? How long does this last?
I don't know, but you are right to mention the workers, our fellow agricultural workers. Some agricultural workers can, work by ourselves in the cab of a tractor and be perfectly safe. But these agricultural workers at the packing plants do have to work in close contact, and obviously we don't want them to be sick. So as the plants come online, you mentioned Smithfield in Sioux Falls. There's a beef packing plant in Greeley, Colorado that I think is also expected to come online in this next week. There are already 17 packing plants, hog packing plants that weren't closed but were slowed down. And I suspect that might be a pretty long-term thing until you can have really effective means of preventing the transmission of this virus from human to human. And I'm not an epidemiologist, so I guess I'm probably not the person to ask how long that's going to be, that the lines have to run slower or less efficiently or in staggered shifts. But yeah, I think it's going to be true that the capacity of the packing industry as a whole for both beef and hogs and poultry is going to be slower for the foreseeable future.
All right, Elaine, let's talk some of the commodities here. Cotton has been one we just haven't talked about. It was down, down, down. Last 2 weeks up. Does this thing have more legs to keep going up?
Yeah, so it's had a good recovery. That sort of nadir was 50 cents, and it's recovered 14% since then. So that is quite a nice bounce. But I don't think there's any reason to get real bullish on cotton when nobody's buying clothes, for instance. See, that's one of the economic sectors that has been most affected by this pandemic, and that's true globally speaking. So, we don't see any real problems in the projections for cotton production. Planting progress is on pace, 12%, I think it was. So nothing really bullish about cotton going forward except to just recover off that low.
And planting progress, we are putting this corn crop, there's a thought, planting progress for corn could be at 50% come Monday, and it should be higher, but it's been raining in the eastern corn belt. So that progress, those are going to be some really high numbers. Is that impacting the market at all too?
Yeah, I mean, to some extent, an absence of bullish factors is by itself sort of a bearish factor. But I will point out, you mentioned the rain, and geographically, there are some places in this country where planting progress is extremely slow. I'm thinking of Minnesota, where the corn would ordinarily be 1% or ordinarily be 30% planted, and it was only 1% planted in the last crop progress report. Sugar beets only 22% planted, should be 45% planted this time of year. Illinois, Indiana, Iowa, all the I states, they were pretty slow, and I think it's because of the excessively moist soil. So that is slower than usual, but it certainly could catch up with a fairly normal or fairly open forecast that you mentioned.
We're going to do two economic questions, one at the end and one right now. This one comes from Roger in Kokomo, Indiana. That's the Eastern Corn Belt there. He's asking, it's hard to believe we got out of this mess without some, it's hard to believe we get out of this mess without some sort of crash. In your opinion, will it be A, deflationary depression, or B, hyperinflationary economic destruction?
I would be leaning towards the deflationary. I don't necessarily think it's hyperinflationary. And you worry about that. Certainly, if the government starts pumping money into the system, you think that is de facto an inflationary influence. But for it to be inflationary, that money has to be spent on goods. And at this point, people are not out shopping. They're not receiving this as wages that they're then spending on goods and services. So that's not going to show up in any inflation series. I think we'd be more right to be worried about globally deflation pressures.
Okay, let's go to wheat for a moment here, Elaine, from Louise in Amy, Kansas. She's asking, what's the extent of the April freeze on wheat in the central and southern plains? We talked about wet areas, but we keep hearing this freeze may or may not be a problem.
Yeah, it's probably a problem for some fields. I think the numbers are showing about 50% of fields in the southern plains have some sort of damage, probably just cosmetic damage. But there are areas where it is particularly concerning. And I'm thinking here of Colorado, where I talked about some of that dryness in the show. We talked about the drought monitor is starting to show growing dryness in the western United States. And Colorado is one of those places. If you have dry wheat and cold wheat, that wheat is going to have a harder time recovering. And so we did see the ratings drop. I don't remember, was it 47, 57% good to excellent ratings on the wheat. Winter wheat, this last crop progress report, but that was mostly because of the poor crop in Colorado. Unfortunately, we're not going to have the usual Kansas wheat crop tour in May to really show us what's out there.
And find out how things look. Well, who knows if we're going to have the corn tour, the harvest tour, or the mid-year tour that we would see in June and July. So Shane in Bloomfield, Nebraska is asking about some new normals and new terms here. He says, is 280-ish cash corn and 90-ish cattle the new normal? And he's asking, follow-up here, is ish the right word in this market price fluctuation?
Is ish the right word? Yeah, I think ish is the right word, especially on that cattle number. I will point out that the 90-ish cattle futures is not the same as the 105 actual cash price that traded this week, which was an improvement. Cash prices that traded late this week were actually better than last week. So not to say just ignore the futures market, but kind of just ignore the futures market in this world where we have the positive basis. But as far as those general price levels, which are lower than what producers like to see for profitability's sake, I believe it is possible when we have all of these troubles in the supply chain for the cattle and the hogs, and when we have this loss of demand for the fuel and the ethanol and the corn, yes, it is possible for producers, even in these essential industries that you think wouldn't be so elastic to these things, it is possible that we could remain in these sort of unprofitable levels for the foreseeable future.
All right, well then that's kind of leading into Chad in Schubert, Nebraska's question. He's asking, with lots of old crop in the bins, does a guy start selling to make sure the bins get empty? And when this said grain does hit the market, will that keep any rallies from exploding?
I mean, yeah, sort of. Right. So the general idea is that farmers typically have to sell something because they need the cash flow, if nothing else. You're not contractually obligated to clean out your bins from one year to the next. You can store grain from one year to the next. That's not my marketing suggestion. I don't think that you're all of a sudden going to see higher prices on January 15th of 2021. There's no reason necessarily to store this past harvest. I'm not bullish for that sort of time frame. I'm just saying that you can store it indefinitely if that's what you had to do.
Okay, well, we mentioned ethanol a little bit, and I didn't get this mentioned a few minutes ago. The FDA this week shut down the ethanol plants from producing hand sanitizer, and that was yet seen as another kick in the teeth for ethanol. And this one's another question about ethanol shutdown that's hurt them. Dean is asking, with ethanol plants slowed and shut down, creating a shortage of distillers grains, how much protein demand will be shifted to soybeans? Will it be enough demand for some price recovery? And will it make beans the winner over corn in 2020?
This is a really insightful and complex question. And I will say that the evidence isn't really there yet. I mean, the point about the volume of feed demand being shifted over to soybean meal, that's probably true because the distiller's grain just isn't available. So of course that demand will have to go somewhere. But you'll note that soybean meal prices have actually continued to churn lower right alongside corn prices. So it's like $288 per ton at the moment. So because the feed markets are all substitutes of each other, just because the volume of demand has moved over to soybean meal instead of distillers grains, the prices of all of them altogether nevertheless seem to be moving lower.
Well, and there's the school of thought of there's less animals. We're not trying to fatten animals up as quick. We're trying to slow them down. And so maybe we're not feeding the normal rations. The rations have changed a little bit. That was a thought that I heard. All right, final question. This one's from Oklahoma. BB in Oklahoma. When this virus is over, how long could we be looking at to recovery in cattle and in all trades?
I, again, am not an epidemiologist, but I will say that I mentioned in the show the study from the RFA about ethanol demand recovery. And let's look at their projections as sort of a proxy for overall consumer behavior, because they're talking about a 50% reduction in demand now. And we've seen that evidence. We used to see 1 million barrels per day produced in the weekly reports. And now we saw 457,000 barrels produced per day of ethanol. So 50% reduction in demand, let's say. And this continues for who knows how long. But their projections suggested that it might recover about 10% in June, another 10% in July, and onwards and so forth, but still be 5 to 10% below normal by the time we get to December. So they're talking about looking at lower demand for ethanol, and let's just use that as a proxy for all of the markets that she was asking about. That lower.
All right. Elaine Cubb, perfect timing for your point. Good to see you. Thank you so very much for joining us here on the Market to Market program, and that is on Market Plus, which is both in video and podcast form. Next week, we will explore the effect of COVID-19 on rural grocery stores, and Ted Seifried joins us for some market analysis. For all of us here at the Market to Market program, I'm Paul Yeager. Thank you for watching.